Excellent. Thanks. Thanks, Kevin. Can everybody hear me okay? That was a very nice introduction. Somebody must have written that for me. Fantastic. Okay, thanks, everybody. So pleased you decided to join us here today for this multi-speaker event. These are great events because you get to see and hear different approaches from different angles, from different traders, different trading educators. So I'm really excited about doing this, and I want to thank the folks over at Real Traders webinar for allowing me to be here today. So today's topic, I'm going to jump right in. You should see the screen in front of you. It says the one indicator every trader should use, a complete trading setup. And that is going to be the focus of my discussion for the next 58 minutes. Before I get started, I always like to read the disclaimer so we have it on the recorded version as well. I'm not going to go through the whole thing. It's this disclaimer that I'm sure many of you have heard many times over the past, but it's important because trading, especially commodities, futures, options trading, involves a great deal of leverage, and leverage can be good and leverage can be bad, but it is important that you understand the risks involved. So if you haven't already seen one of these disclaimers, you're not already familiar with the particular risks involved in this type of trading, you should familiarize yourself. So you should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. That's just the recap, and the full disclaimer, of course, is on all the pages of our website and in the presentations as well. So I won't get into the about me because Kevin was nice enough to read out that bio, but just briefly as a recap, been trading since 1992, been active in the markets for most of my adult life. I started quite young, roughly in my early 20s. I'm 48 now, so it's, wow, if you do the math, the simple math always gets me. It's a whole bunch of years. About 10 years into my own trading career, I decided to test the waters in trading education. Found out that I was pretty good at it, got some good feedback. I enjoyed doing it, went on to build a trading education company called thetradingzone.com, and as you were just told as well, more recently, a company called Chart Pattern Trading. So one is a very in-depth, hand-holding type of education, and that's at the Trading Zone, where we go very deep into market profile strategies. It's for very active day traders who want to trade the commodities, and chart pattern trading is kind of a stepping stone where it's for less active traders. Yeah, sure, you can day trade, but you can also swing trade and stock trade. Less of the hand holding, more of an independent courseware where you can guide yourself through the strategies and setups. Today's topic is going to be from chart pattern trading, and I'm going to talk to you about an indicator and a complete trading system based on the ADX indicator. And as the title suggests, it is a complete trading system, whether it be for day trading or swing trading for that matter. If you like what you see, I'm going to actually lay it all out there. You're going to get about 80+% of the actual trading system, and I'll explain the reasons why I do that. But if you like what you see and you want to learn a little bit more, this link at the bottom will take you to a more info page. It's realtraderswebinar.com/chart pattern trading, and I'll give you that link again towards the end of the presentation if you're interested and you want to learn more. Before I get started, I want to just have one little sidebar note. The slide says very important, and this to me is critically important whenever I talk about trading, whenever I talk about indicators or systems, or living the lifestyle of a trader, or doing it part-time to supplement your income, whatever it is. I am very attached to the concept that I do not use any special or proprietary indicators. I don't use anything that's black box or concealed, or that I can't crack open the hood and see exactly what's going on. So everything I'm going to show you today is based on an out-of-the-box, off-the-shelf indicator. In fact, 99% of all charting platforms that you'll use come equipped with this indicator, including an absolutely free online charting platform, and I'll show you exactly which one that is. I have some specific reasons for this, and I'll just tell you briefly. Most people come to trading for a love of the markets, certainly why I started, but also as importantly, or maybe more importantly, because of a certain lifestyle, every trader, investor, active participant in the markets I have found has been a person of great independence, wanting to take control of their financial future, wanting to do this on their own, for themselves, for their families, and they really crave and work towards that independent lifestyle. And then what ends up happening is, at times, you find traders gravitating to these prepackaged, cloaked, or proprietary systems. What happens then is you find yourself kind of being tied to somebody else's creation. And if that system stops working, you won't know the reasons why, you won't be able to fix it or adjust it. You'll in turn actually give up a lot of that independence that you sought at the beginning. Also, if an indicator fails on you, and of course every indicator fails, nothing is 100% of the time, but if you don't have the transparency, you won't know why it failed, and you won't know why, you won't know if it's going to continue to fail, if it's been decoupled from the market, if it needs an adjustment. So I'm a real believer in the transparency, whether it be in the systems that I'm going to show you or in the indicators, and then I have specific reasons for that, and I'll explain those as well, as I do right here. So why would I simply give away this incredible trading setup, right? This is something that I've been using for my own trades, both day trades and swing trades, for well over 2 decades. Excuse me, just a little coffee. And I often get the question, well, why would you just give this to us if it's so fantastic? Well, my belief is that trading is a journey and it's not an event. And I'm going to show it to you, and it doesn't mean that tomorrow or in an hour from now or in 3 days from now that you're going to become the world's best trader based on this one system or this one setup. It's going to be an additional tool that you can use to improve your results, potentially to build a trading business around it. But, trading is really a journey. You learn things, you build your knowledge, that knowledge continues to grow, you develop your own systems around this knowledge that you accumulate. The mechanics of trading is one aspect, which is very concrete, and then there's the personal and psychological elements of trading, and the two have to combine to give you a sustained long-term success in the business. Now, of course, I can't, in a 45 or 50-minute webinar, dig into each individual person's psychology. I can give you psychological tools that you can use, but it's much easier to just talk about the mechanics, so that's what we're going to do. But I do believe that trading is a journey, and you should look at it as a journey, as I have for the last 2.5 decades. And I hope that after you've gotten to know me and I've shown you just how straightforward and easy some of my approaches are, that you'll perhaps come to me for further education and decide to buy some of our products. Of course, that choice is ultimately up to you. So we're going to get right into it. I'm going to walk you through some basics, and some of you are going to say, well, I've seen this before. This is kind of basic stuff, but that's okay. The basics will just take a couple of minutes, and then I'm going to walk you through the actual setup and configuration of the system, and then we'll do some charts. We'll actually look at some trades that have triggered and what to look for moving forward. Alrighty, so far so good. So we're going to start with what is an indicator. Sounds simple enough. When you open up a chart, you're presented with a set of different tools that are there specifically to allow you to evaluate something that's happening in the market. So when we say that thing that's happening is what we call a change in price. If the price doesn't change, doesn't go from point A to point B, then we don't really have anything to measure. Now, it's very different than trying to pull out a crystal ball and predict what's going to happen in the future. No method, no system, no indicator can predict the future. What we can do, however, is take tools, measuring tools that we call technical analysis, apply them to actual events that have occurred in the markets, measure those events quantitatively, and then extrapolate further into the future with the premise that if this happened in the past repeatedly, there's a greater likelihood or probability that it's going to happen in the future. Not a certainty, but a probability. So that is the degree of prediction that we can talk about, is simply to say it's happened a lot historically. Traders, investors, market participants are creatures of habit. So therefore, what they've done in the past will tend to repeat again in the future. So the indicators are nothing more than tools based on a mathematical calculation that helps traders and investors measure and understand the recent price movement. Again, that's what we're looking at, change in price in order to better understand and predict future price movements, right? And then we apply certain probabilities to it. If this happened 10 or 12% of the time, then of course it's not something that we want to base any future investments on. If it's happened 80 to 90% of the time, then it becomes a much better indicator, obviously. Now, when we say that things that happened in the past are likely to repeat again in the future, I sometimes get the counter argument, well, certainly, Greg, but markets ultimately are random. So how can you say that? Vince has asked, did I say that? Right, we cannot predict. Vincent is asking, did I say that indicators cannot predict future price movements? I'm saying that we cannot predict specific future price movements. What we can say is with a probability, with a degree of probability, the indicator will tell us something that happened repeatedly in the past is likely to happen in the future. So we make the distinction between definitely going to happen and likely to happen. So there's that element of probability, and that's what we talk about in trading. But the reasons that the patterns do repeat themselves over and over again is because if you take the global community of traders, if we take any one stock, for example, let's take as an example Apple, right? And let's say there are, for argument's sake, we'll just use some fictitious numbers, 100,000 people trading Apple today. Well, more than likely, tomorrow, you're going to have that same community of traders. The same active traders that are active in a stock, in a market, or in a commodity on day one are going to be the same ones who are active on day two. And I'm not talking about the small retail traders that make up a small portion of any market. I'm talking about the institutional traders, the market makers, the floor traders, etc. So if you have 100,000 people trading one particular item, and a whole bunch of them leave and new ones come tomorrow, then maybe you've turned over 1 or 2% of that community. So when we talk about like the global or macro psychological impact or psychological a move of a market, it's what we call it's a chaotic system, but it's not random. In other words, they're going to do the same things that they've done in the past. If we were to replace all of the participants from day one to day two, then it would be very difficult to have any type of future prediction. But I want to make sure that we understand when we talk about future or predictive moves, it's within a degree of probability and not 100% accuracy. So when you open up your indicators on any charting platform, you're going to be presented with sometimes as many as 300, depending on what platform you're using, things like moving averages, RSI, MACDs, etc., right? Generally, these indicators, if they're price-based, will be on a top panel overlaid on the candles, your bar patterns, and if they're momentum or volume-based or change in price, they'll be placed slightly just on the lower panels like the MACD and the RSI. But today's indicator, the one I'm going to drill down and focus on, is an indicator called the ADX. The ADX goes by a couple of different names, so when you go and start poking inside your own charting system, you can say, hey Greg, how come I don't have the ADX? Well, it's there, but but for whatever reason, it goes under a couple of different names. It goes under the ADX, the DM, or the DMI. So you may find it under those particular names. It was developed by a man by the name of J. Wells Wilder, who is quite popular and well known in technical analysis folklore for being the inventor of the RSI. But he also invented this indicator called the ADX, somewhat less popular, but in my opinion, a lot more effective. It's part of a system that he called the directional movement system. And that's what the DM stands for, directional movement. What I love about it is if you configure it properly and make a couple of slight adjustments and changes to its setup, then you can successfully use it completely on its own as a trading system. It'll signal trend changes, entries, exits, trade management, etc. So let's dig right in and see what that's all about. So the ADX system has three components. The first component is the actual ADX component. The term stands for average directional index. The term is somewhat misleading, and I would like, if I could, to actually change the name of it, but I'm not in charge of that. Because the ADX component of the entire indicator actually does not measure direction at all. It measures only strength. So if we hold direction aside for a second, whether the market is going up or going down, and we only measure strength, meaning how quickly, with what impact the prices have changed, that's what the ADX component will measure. The second and third components are the DI components.
Testing 1 2 3. Testing 1 2 3.
Yep, we hear the test.
Sorry.
The DI plus is a measure of the buy side, the bulls or the buyers in the market, as the green color indicates, and the DI minus is a measure of the sell side or the strength of the downtrend. Okay, so already we can see how the indicator is a little bit different than others that you may have used, in the sense that it segments the market into three components: the pure strength, buyers, and sellers. The best way I can show you how to use it and its effectiveness is actually walking you through a setup. And I know that this is something that is rarely done in these public webinars. People like to keep things concealed, a little cloak and dagger, but I'm actually going to walk you through how to set it up on two different charting platforms. I can't obviously go through all of them, but if you're a little bit familiar with how to use your charting platform, it's just as easy, with a couple of small little changes, little tweaks, but really nothing complicated and nothing major. As a conventional out-of-the-box ADX DM setup, this is what you're faced with. So if you were to just click on, hey, let's load the ADX on my chart, this is what it would look like. All right, you'd have three lines down on the lower panel. You'd have the DI plus, the DI minus, and the ADX line. And the very first time I was presented with this, many years ago, I encountered a trader who was having tremendous success with it, and I was really interested. I really wanted to learn more about it, and I loaded this thing up, and I could not make sense of it. I couldn't make heads or tails of those squiggly lines. So I kind of shelved it for a while, and then I came back to it. The reason was that it was very confusing, and my brain, and I've been doing this for 25 plus years, I cannot, in one panel like this, I can't track three variables. I'm not saying that nobody can, I couldn't. And when I would look at the indicator, because I'm always accustomed to looking at indicators with one or two lines on them, that third variable had me making errors repeatedly. So I put it away, and then I came back to it some time later because I really wanted to. My personal approach to things is I need to dig deep, and I need to understand what's going on. And I need to pull back the curtain and really understand. And if somebody is having success with something, I want to know why. So I came back to the ADX and I said, let me pull it apart and see if I can have some better access. So this is my configuration, and as you can see, comparatively, I'll go back for a sec, right? This is very confusing, too many lines. Now this is my configuration, and I've done some very simple things, and I'll walk you through those. At the root of what we do as traders is we recognize things that are happening on our charts in a visual, graphical way, and then we act on them, right? So before recognizing them, of course, you have to learn a system, learn an approach, learn what it looks like, train yourself to find those patterns and setups, and then act on them when they happen. If the tools that you're using are overly complicated and difficult to look at, then the whole next part of the equation fails. By the time you've located the potential trade setup, you don't have time to act on it because it's confused you or it's distracted you. So I'm really all about clean configurations. My charts are always very clean and uncluttered. What I've done here is I've taken the ADX component. Again, the ADX is the part that measures only strength, not direction, and I set it up as a histogram or a bar line as opposed to the line that you saw earlier, right? And I put it on its own panel. So it used to be down here as a third squiggly line. I removed it and I put it on its own panel as what we call a histogram or a bar chart. And then I left the DI plus and DI minus on the lower panel, but without the ADX component. So the ADX is isolated, and the DI plus and DI minus are now isolated below. And I use colors because I like to have a color convention in all of my charts. So if I'm looking at strength or buyers, I want to see green, and if I'm looking at sellers or bears, I want to see red. So I tend to use the same conventions over and over again. And the other thing I've done is overlaid on top of the ADX, I've put these horizontal lines, 3 horizontal lines at 10, 20, and 40, and I'll walk you through those. Those are critical to the system. So if you are, let's say, using Sierra charts, and I'll show this on another platform as well, not any more complicated, you're going to find an indicator called the ADX. You're going to add it to your subgraph, right? Now, on a number of different charting platforms, there is a directional movement index, which is that bundled one that I showed you with all 3 lines together. I don't want to use that one. If it's the only one that you have, in other words, let's say your charting platform only has the 3 lines bundled together, I'll show you how to extract it and segment it into 2 separate panels. So I have an ADX standalone as a horizontal or histogram. I have the horizontal lines overlaid at those numbers, 10, 20, and 40. And then I have the DM plus, DM minus, which are the red and green lines below. So this one over here, this is the bundled one, the DMI plus the ADX plus a smoothing factor, way too much. That's the one you want to avoid, okay? The next thing I've done is I've taken that subgraph, and you can see that I've changed the style to a bar or a histogram, just so I can visually identify it. And then I've overlaid horizontal lines at 10, 20, and 40 on top of the ADX. So it's pretty straightforward. That's the extent of the setup that you need. If you wanted to do this, let's say, on an absolutely free charting platform, let's say you weren't an intraday trader, but you were a swing trader, multi-day, you can go to something like freestockcharts.com. And it's just as simple. You would load just the ADX indicator in its own panel. You set horizontal lines at 10, 20, and 40. And then you set an a DM plus DM minus on the lower panel. Keep the 2 separate so they're easily visually appealing. And on this platform, there's a little checkbox. You can say, repeat this on all my charts. So you can actually set up one chart, one template, and then zip through your a list of your watch list, and it'll just update over and over again. You don't have to change the chart once your template is built. Let's look at NinjaTrader for a second. Let me just grab a sip of coffee because it's a morning webinar, so coffee is critical. I mentioned that on some platforms you can't. The 2 are bundled, right? So what do I do if the 2 things are bundled? So this is an example on NinjaTrader. When you go to load this up, the ADX, DM plus, N minus are all going to be bundled together. Here's a very, very simple workaround to that situation. You load the indicator twice. You create it twice. So you're going to have 2 subpanels. They're both going to have all 3 lines on them. And then, you simply take the one that you don't want to see and you set the color to the same color as the background. In other words, on this upper panel, these 2 lines are actually there, but I set the color to transparent so I can't see them. And on this lower panel, the ADX histogram is actually there, but I've set its color to transparent so I can't see it. And I'm just running the indicator twice. So that's a very, very simple workaround if you happen to be with a platform that doesn't allow you to install one and the other. So you install them both, just change the color setting so you've set the one you don't want to see to transparent, and you run it twice. So clean, accurate, easy to read, easy to install. Again, the simple trick, install the indicator 2 times if you have to. A lot of the platforms will actually allow you to put them in separately. What platform do I use? I actually use both NinjaTrader and Sierra Charts. I probably am somewhat more active on my NinjaTrader charts. Stephen is asking, which, but you know, there's a multitude. However, I should also say that sometimes if I want to do some swing trading, right, I'll go right to free stock charts, because then rather than loading up my whole platform, you go to freestockcharts.com. It's free. I have my watch list, and you can use the free version. You're not going to get intraday. You're not going to get day trading stuff, but if you're doing daily swing trading stuff, it works great. It loads right away. You don't need up-to-the-minute data. Okay, so now we understand what indicators are, generally speaking, what we hope they will achieve in our approach to evaluating the market. We've set up a template that is crystal clear. It's uncluttered. It looks good. There's nothing complicated. And now what we'll do is we're actually going to walk through how to use it. Okay, so we're getting into the parts of the actual system. How do we, now that we've had it set up, we have our templates, what are we going to do with it? How are we going to find some trades? And of course, that's what everybody wants to know. That's why you're here. So I'm going to walk you through it. You'll see everything I do is has a very mechanical and structured approach. That's the way I think, and that's the way I approach things. So everything is always a step 1, step 2, etc. Step 1, we're going to start with the strength of the trend, right? We are only going to use the ADX component as step 1, because in investing, trading, etc., if there is no trend, then there's no reason to put on a trade, because we can't predict what's going to happen in the market. We can say this is what's currently happening, and now I'm going to use my tools to measure it, and based on historical events, I can extrapolate and say it's likely to continue in that direction. But if I can't at the very, very basic say what is actually happening, then why would I put on a trade? If I can't accurately determine that there is a trend, that the price is moving. Remember, we talk about just the ADX, which is just strength of the market, which I said as an explanation is change in price. So if the price is not changing, I don't have anything left to measure. And technical analysis is all about that measurement aspect. So if I have nothing to measure, I don't put on a trade. If, however, I can measure the trendiness of the market, in other words, movement, I haven't talked about direction yet, I've only talked about movement, then I'm going to look for a potential trade. So how do I know if the market is moving and if it is moving sufficiently enough to warrant a trade? Well, this is where these lines come in over your ADX 10, 20, and 40. Okay, so I'm only focused on the top panel. Again, I do things very methodically, so I go from chart to ADX to DMI. It just makes sense to go in that same order. So I'm only looking at this panel right now. Is the market moving sufficiently enough for me to look for a trade? We have lines at 10, 20, and 40. We only want to focus on this panel. This is what we're going to look for. 0 to 10, the market has no trend. It has zero energy. It is in the danger zone. Anything could happen. A small amount of volume can move the price in any direction. Stand aside. 10 to 20, something is happening. Money is coming into the market sufficiently enough to move price, right? So we are transitioning. 20 is the transition number. 20 is the number we're going to be looking for. The move from 20 up to 40, that's the sweet spot, right? That's when we're trending. When we go to 20 to 40, that's our sweet spot. That's the heart of the trend. Plus 40 is the exhaustion. In other words, the move has expired, and now we have to look for exit signals. Okay? Isn't that chasing? No, it's just the opposite of chasing, because I can't get in before a move starts because I don't know what that move is. If the market isn't moving, then how could I possibly put on a trade? Chasing would be to buy it once it's up at 40. That would be chasing. Then the move has already come and gone. Let me walk you through now. We only want to look at the ADX to determine the trendiness of the market. If there's no trend, we stand aside, we look no further. If the market can't tell me what its trendiness is, then I'm not interested in moving forward with any type of trade. Now we're going to go to step 2. Step 2 is the second component, the bottommost panel of the chart, the DI plus, the DI minus, that tells us who in this market is dominant. We have choices. The choice can be buyers, or the choice can be sellers. One of the two market participants is going to be more influential than the other. That's how markets work. One of them is going to be leading the market. So now we are talking specifically about direction. Who is in charge? What direction? And how do we evaluate? How do we interpret? Okay, so now we're going to move our attention down to the lowest panel, the DI plus, DI minus. The dominant party, the one that's in charge of the market, is going to have a line on top of the other. So the higher line is the one that is stronger. Basically, the red line on top of the green line means sellers are in charge. A green line that's on top of a red line means that buyers are in charge. And we can see that when they cross, where's my pointer? When they cross, we get a transition from one market participant to another market participant. Okay, so very visually appealing, very easy to evaluate, and easy to look for. Next step. How do we now combine this information, market strength, trendiness, DI plus, DI minus, bring those things together and actually start to find trades or build a system around it. So now we have kind of like three disjointed elements. We have pure strength of the market, we have buyers, DI plus, we have sellers. We know independently what's going on, but in order to build a system, we need to create some rules, bring these things together, and have something that is identifiable, objective, and repeatable, right? Those are the definitions of a trading system. It has to be clearly identifiable. It has to be objective, so that if I see it, you see it, the next person sees it. And then lastly, it has to be repeatable. We have to be able to do it over and over again. So let's bring it all together. First, we are going to look for the ADX. Hold on, I'm getting a lot of questions, but everybody's jumping ahead. You're asking about things that will come later on in the presentation. So let's just allow me to go through the presentation and walk through the configuration. We're going to first look at our ADX, and we're going to look for the market that has transitioned. So a market that's transitioning from no trend to trend comes from below 20 and crosses the 20 mark. Where's my pointer? Where does that pointer keep going? Right, comes from below 20 up to the 20 mark. So this is a market that just transitioned. In other words, to the left, there was no trend, right, or not a sufficient enough trend for us to warrant a trade. We poked above 20, that's our heads up alert, something is going to happen, right? The trend has now begun. That's not your entry signal. The entry signal is when we have a transition from whoever was dominant prior to the other component. In other words, who was the dominant party when there was no trend? Well, we can see the dominant party when there was no trend was the sellers. So if we've transitioned, transition means to go from one to another, we're going from sellers, therefore we are going to buyers. So we have sellers dominant, we get a transition, and now we wait for the buyers to take charge. So when the green crosses above the red, that then becomes your entry signal, which is right over here on this candle. Okay, we're looking for the buyers to take charge. Why do we do the two things? Why do we wait for a change in trend and then? Because we can get false signals. We can have a little run up to above 20, which basically means we've had some volume or some interest in the market, but we haven't had a sufficient transition from sellers to buyers, buyers to sellers. So it's an alert with a confirmation. This system is very much about the market first proving to you that it wants to do something, and then you participating in what I call the sweet spot of the trend. It's not about getting in. You're not going to be the first person on the trend. There's not. You're not going to buy down over here, right? I don't have the predictive ability to do that, and I believe that those who try to find those absolute lows and absolute highs, end up doing a lot of damage to their account. But I'm prepared to give up this little piece over here and wait for this confirmation and then take the trade up to its exhaustion. So the ADX then rallies all the way up to plus 40. What do we know about 40? We are at an exhaustion point in the trade. The trend is likely over. We're going to start looking for a reason to get out. Now, markets can stay overbought, markets can stay oversold. So what does that mean? When it crosses above 40, we don't get out. When it crosses back below 40 from above, that's when you get out. In other words, you can see a market remain overbought and again oversold, right? The chart, this ADX will look the same oversold because this is just strength, not direction. So this above 40, it can remain there for days, weeks, months, depending what time frame you're trading on. And if you're long and the market is overbought, well, fantastic, hallelujah, keep your trade, but get out before it starts to come down. Yes, Phil, stocks, indices, Forex, I'll show you a bunch of different setups. Now, so runs up to 40, market is exhausted, start to look for your exit. Okay, let me walk you through this again. Let me point something out in this walkthrough. A lot of people do the ADX and they say, but look what happens, Greg. You get all of these fake bad signals, right? Look at all these terrible false signals. To which I say, well, you're not using it properly because look up, just above. What do we see? The ADX is below 10. This is your danger zone. These are not entry or exit signals. These are ignored because you haven't looked at the prior condition. Do you have trendiness in the market? And that's why that's a precondition. No trendiness, no trade. Right? So let's go back over here. ADX is below 10. We ignore this. These are no signals. We stay out. Nothing to do. ADX now 10 to 20. Hello, pay attention. Something's going to happen. ADX hits 20. Start looking for your cross. Right? That's when you want to participate. There's the run. Now, you can also look for exhaustion plays. As an example, we crossed above 20. That was the trigger to start looking for the long. We crossed from above to below 40. You can look for a counter trade, reaction trade on an overbought or exhausted market. So you can do the same thing in reverse. Hits the 40, comes back inside. Is that the signal? No. Sellers taking charge, red crossing above green. That becomes the signal. Right? So Donna's saying, how do you do it the whipsaw? The only thing you were concerned about is the first cross after a 20 or 40 alert. So the other ones are ignored. Right? The only thing that matters on my DI plus, DI minus is the first time it crosses after I get this alert. And it could cross back and forth over and over again. That's just market noise. However, if I lose my trendiness, then I get out. So I don't mind staying in a market that's noisy as long as it's still maintaining its trendiness. But if, let's say, you took this counter trend over here, right? Drops below 40, sell short. Now it drops below 10, or even below 20, you're into some lack of trendiness, and then 10 is the danger zone. You don't want to be in the trade anymore over here, because you can't tell me with certainty who's in control of this market or what the trend is. We knew that it was overbought over here and it came down, but once it entered this zone, look, back and forth, no trend, whipsaw, 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 whipsaw. But those aren't signals. Well, it's a signal to it's a signal to stand aside is what it is, right? So ADX crosses above 40, market is exhausted. Wait for the sellers to take over and you can enter your counter trend trade. ADX is now below 10. There is no more trend on this counter trend trade. You don't want to be in the market. You don't want to be in the market if you're looking for a trend-based trade. You don't want to be in the market with an ADX below 10. So first, you watch for trendiness. New trend, we poke above 20, from below to above 20. Exhaustion of a trend from above 40 to below it. And then the first cross of your DI plus DI minus becomes the actual entry signal. And then the other ones you ignore. You just follow along with your trendiness indicator. There are different ways you can use adjustable stops, and obviously there's a lot other little tricks and system configurations, but nothing proprietary in the sense that it would only be ADX related. I'm talking about trade management, chart adjustments, time parameters, things that you would adjust no matter what system or approach you were using. Let's review the steps to make sure everybody understands. Step number 1, determine if there is a trend. Use the ADX only measurement of strength. Remember the numbers 10, 20, and 40, right? 20 is your magic number for a new trend. Exhaustion happens at 40. 10 area is your danger zone. Determine the direction using the DI plus DI minus. Whoever was previously in charge is going to relinquish that control to the next party. So if the sellers were in charge, right, we're going to transition. We're looking for a change. That's what the trending is. We're looking for a change in trend. Step 3, we're going to combine that information, the ADX, the DI plus, in order to find that signal, that cross. First, the cross above 20, exhaustion up to 40, and remember, the signal is the DM cross to enter a trade or the counter trade. When we're above 40, the market is overbought or oversold. That's when you have to start planning your exit, and that could mean a move back below 40, or it could mean just ratcheting up your stops, putting in protective stops, protecting what you've earned. Same thing when it goes down to below 10. If ADX is at 70, wait till it goes back to 40 to get out. Right, well, Lisa, 39, right? So if it breached below 40. But let me repeat that question, actually, because it's an interesting question. Lisa is saying, if the ADX is all the way up at 70, do I wait till it drops below 40 to get out? So if you were talking about an ADX that was all the way up at 70, you were talking about a stock or market that is extremely overbought. So you have to do a little bit of conventional trade management that says, from the ADX to come from 70 all the way down to 40, I can give up a lot of that profit. Yes, I will lose my trendiness below 40, right? I will be back into a retreat or a pullback, but maybe that's not the only way to look at it. Maybe a more conventional stop placement using conventional money management says, this thing is overbought, and I can set a stop using, chart patterns, previous highs, previous lows, stuff like that, in order to protect my profit and not necessarily wait until it comes all the way back down to 40. It's sort of like when we do our day trading at the trading zone, and we have traders who trade 1 lots, and we have traders at 5 lots, and we have traders trading 20 lots, and on some of our trades we use we'll use a 15 tick trailing stop, let's say, on crude oil. But if you're a 1 lot trader, it doesn't make sense to use a 15 tick trailing stop. You have to apply your money management more consistently with your trade size and your risk parameters. Is this, Ripple is asking, is this the same as average directional movement index? Yes, it is. That's what ADM stands for, or ADM, ADX, correct. But if they phrase it as that, you may have to do what I showed you and segment the two. If they do it as an index, it may be all combined. Can we use this on day trading? Absolutely. Actually, the charts I showed you were the 6E, the euro, and crude oil on a day trading basis. Can you use it on futures trading? Yes. As I just mentioned, stocks, swing trading? Yes. It's all about adjusting your parameters, doing some small tweaks to the settings of the ADX and the DMI, and doing some small tweaks and using different chart types depending on which environment you're trading in. Let me give you some examples. As an example, this is a crude oil on a 4-range chart, right? So if you want to trade on a day trading basis, then you're going to have to make some chart and parameter adjustments to fit the context of a fast-moving market in day trading. And you can adjust it to get 30 trades in a day or 1 trade in a day. And that is determined by you, the trader. I can't tell you. I mean, a trend exists in every time frame. I can pull out a 22-second chart, not that I would want to, but I can pull out any time frame chart and find a micro trend, or I can slow down that chart and find a bit of a longer time frame trend. So you have to, if you're an active day trader, you work backwards a little bit and say, well, what am I looking for here? Am I looking for, you know, am I looking for 2 or 3 trades in a day? Am I looking for 50 trades in a day? Am I looking for 8 tick scalps, etc.? A lot of questions. Is there nothing left for me to sell? For swing traders, this would be on a daily chart, right? As an example. So you have your cross above 20 over here. Here is your signal, and we don't hit 40 until October. So this was a long time swing trade. This was a multi-month swing trade, but look at the nice move. In fact, if you look at it, we actually had a short signal as well. So it hit the long expired, and then the short triggered just slightly after that. Here's a most recent chart. Actually, this chart is from yesterday, and this is Amazon, and you can see Amazon triggered back in December. And it would still be, it actually had just exited the long about a week ago. I want to point one thing out that's quite important. Somebody's saying, well, if I've showed you the whole system, what's left for me to buy? Here's the thing. There's probably another about 20% of the information in the system that you'll get in the full course. In addition, in my complete chart pattern trading course, there are other systems that are just as easy to work, and there's also a lot of other trading information, some really concrete stuff, trade management psychology, building a trading plan. Like I said, 2 other trading systems that are pretty much as easy to use as this one that you can implement within an hour of watching the video. I want to point this out. This is a GMCR, Green Mountain Coffee Roasters. So you had an exhaustion play over here, right? You had the exhaustion move over here, and the actual entry is over here when you get the cross. The reason I'm pointing this out is the time between getting the heads up alert and the actual signal was about 23 days. So we know as traders and investors that these things happen. We know that markets can meander and stay in a kind of a nowhere zone until they trigger again. So if you're using and you want to get comfortable with the system, these are one of the things, especially on a swing trading daily chart basis, that hey, I got my heads up alert, the silly thing didn't trigger. Well, you've got to watch it. You've got to put it on your watch list. It may take a day or 2. If I go back and I look at the Amazon one, it took about 4 days, which is pretty much average. Now, if you get a counter signal, of course, you reset. But like for this one, as an example, it took 21 or 22 days. So just, you put it on your watch list. And so and on a day trading basis, so that would be one of the adjustments you would make on your settings, right? You would make one of those adjustments to say, well, I don't want such a long lag between the 2. I want to get more frequent trades, and I want to tighten it up. So what's next? What's next in all of this? Next is settings for day traders. different chart types for day traders versus swing traders, different settings for swing traders, right? How to scan for options trades, because you can use this for options trades just as well. Stop placement, how am I going to place my stop? What type of protective stop do I need? Trade management, same concept. And that's all the stuff you're going to find in the balance of the 20-25% that I didn't, sorry, that I didn't provide here. You know, we leave something to the imagination. In the full course, you're also going to find some basics on technical analysis, some advanced stuff on technical analysis, candle patterns, gaps, trading psychology, building a trading plan, how to trade gaps, professional, non-professional gaps, how to trade the open if you're an active day trader, some stuff on market profile. The complete course is very comprehensive. What I've done here today is I've extracted one piece of it in order to show you that when you build a system, it doesn't have to be overly complex. It doesn't need 100 different indicators. You can do it with 1 or 2 indicators as long as it's rule-based. Can this be used for Forex? Absolutely, it can be used for Forex. There's any market that has buyers and sellers and momentum, you can use it on. It's just as easy. As a matter of fact, you set the template up once and you can run a bunch of different markets, stocks or markets or indices, whatever you want. There's also a very nice way to do some scanning for options trades. If you're a directional option trader, or if you're a premium seller. So the course is, you can find more information on the course here. realtraderswebinar.com/chartpattern-trading, and we are actually offering the course at a 50% discount for attendees today, and that was the deal we made with Real Traders Webinars. So the course is regularly $997, so it's going to cost you less than $500. It's a great thing to have in your trading library. You'll have the ADX videos along with a ton of other stuff, including a linear regression system, a Bollinger Band system, market profile system, trading the open. A lot of great stuff. It's really comprehensive. Like I said, what I've done is I've just extracted one piece because I know it's the piece that people really get excited about. They say, Greg, this was easy. I understood everything you showed me here. I think I can get my head around a system like this. So if you're interested, you can go and have a look at that link. I'll just answer this last question. On the GMCR, would you enter the short side? Everything, Don, the course is all online, so you just log in and it's all viewed online, and that's the easiest way to do it. So if you have questions, we have a Q&A section where if you ask something, I respond for the entire community. If there are new charts, I can share them quickly with everybody. Somebody's asking about the GMCR chart. I just want to see on the GM, would you enter the short side when the price continued down and the ADX moved up again? The price continued down. Okay, so this trade reset over here, right? Because we dropped below 20, so you reset, and you didn't get an actual long signal until all the way over here. But look, who asked the question? Chris, look what happened, right? So here you get your long signal. Here's your heads up, right? And here's your long signal a number of days later. But look where you are. You're at 39.40 when you get your long signal, right over here. So you have to look at that and say, well, I'm pretty close to the 40 mark. Do I want to take that long? I think maybe I've missed it. Typical winners and losers. Well, here's the really interesting thing about the system is when you start tweaking those indicators, what you're going to find is some markets work exceptionally well. In other words, I would look at it as a handful. Go through your scan list of, if you're a swing trader, go through your scan list of stocks, and then look at some historical charts, and you'll find that there are some charts, some stocks, where they are so in sync with the ADX system that you get 2 to 4 just brilliant trades a year, like those multi-week to sometimes 2 or 3 month trades, and it keeps you in the sweet spot of the move, puts you on the sidelines when it does nothing, right? And then what you'll do is you'll find some other ones, other stocks where it just it never lines up. You get the heads up alert and you get a bunch of resets and the thing never triggers, and you just say, okay, done. That's not a stock that I'm going to use this system on. Works very well on the day trading front. It works very well on some on markets with a little bit of a volatility spike. So it works really well, let's say, on the CL, on the TF Russell, the DAX, the 6E. The ES, by contrast, the S&Ps have been, the volatility has shrunken substantially. So what happens when you enter a market with that type of reduced or compressed volatility is you end up in those ADX dead zones for a period of time, and it doesn't trigger that much, and then you find yourself over tweaking the settings trying to accelerate it. Better to find a market with a little bit expanded volatility. All right, I'm going to leave it there because my time is up, and I'm going to hand the reins back over. I encourage you to go check it out, realtraderswebinar.com/chart pattern trading. There is a substantial discount, not a lot of money if you want to add this to your trading library. It's fantastic, and of course my information is on that page. So if you have more questions, fill in the form, drop us a line, ask me some questions, do what I can to help you out. I hope it was informative. I hope it was interesting. I hope at least the hour you spent was worthwhile. Maybe you learned a thing or two. Maybe you just refreshed your existing knowledge. Thank you all very much. Thanks to the folks at Real Traders Webinar. I appreciate the time and effort in doing these presentations, and thank you all. Have a great day, everybody. Enjoy the next speakers.
All right, Greg, thank you so much. And guys, again, if you want to check out Greg's special offer, go over to realtraderswebinar.com/chart pattern trading. The link is right in the chat box, and I'll continue to put the link for each presenter.